Hello everyone, George DeSantis here with a look at the market for the week ending May 4th, 2018. As we usually do, let me bring up the disclaimer, urge you to read it, since it will explain that I'm not attempting to give investment advice. And the purpose of this look at the market is simply for selfish purposes. I want to determine if I could anticipate what the market might do in the coming weeks. And that's the whole idea. Sometimes I'm right and sometimes I'm wrong, of course. So this is the whole gist of it. And then I share it with others. I made a video and put it on YouTube, and those who want to take a look can do so. Let's start then by looking at the weekly chart of the S&P 500, as we usually do. We have this ABCD triangle, which has existed for some weeks now, and we are playing it out toward the apex of the triangle. And as I mentioned last week, we had this gravestone doji, which is bearish, followed by a hammer the following week. And then last week we had another hammer. With the hammers, it seems that what happens is that the bears try to take the market down to this level, found support at the 50-day or 50-week in this case, moving average, and then the bulls pulled it all the way back up. So that's a bullish indication. We're retesting for the third time. We're testing this 50-day or 50-week moving average. Other bullish indications, maybe a slight uptrend here on MACD histogram, nothing much though. And then on RSI 12, we have RSI 12 trending up above the 40% line, and on a weekly chart, that's pretty bullish. Now, on the other side of the coin, the bearishness of this market, we still have 4 below the 9, 9 below the 30. These moving averages haven't crossed each other yet to the upside if we're going to have an up move. Parabolic is still above the most recent bar. So there is no indication from the parabolic that we should reverse our thinking here and reverse to an uptrend. That's still pending. So that's a bearish signal. A Williams percent R is still below 50%, so I can't get too bullish until it breaks above the 50% line, in my opinion. And it's some of the rate of change indicator, since it broke below the 4% line here, remains below the 4% line. So these are some bearish signals that we're getting. On other indicators, there are some mixed signals as well. Now, so let's look at the daily chart. Where's the daily chart? Right here. Now, on the daily chart, we have a somewhat slightly different picture. We still have the 4 below the 9, although it's trended up on Friday. We have the 9 below the 30. Once again, these moving averages are merging on each other. So we have that market uncertainty. Neither the bulls nor the bears seem to have any advantage in moving it one way or the other. However, from a bullish standpoint on the daily chart, what we have here is this morning star formation, which I'll show you here. In this box, we have this bearish bar, we have this hammer, this doji, and now we have a bullish engulfing candle. This body totally engulfs the body of the hammer, the doji here, and that is a bullish morning star. So if all these things are true, then we might look forward to a further up move here. That's one of the bullish indications here. The other one on the daily chart is that it seems that MACD, there's MACD sitting right on the zero line, just close to the zero line, slightly below it, it's red. So that's what MACD is showing us. RSI 12 on the daily chart, not as effective as an indication as on the weekly chart, but it seems to be breaching the 40% line, going higher. Williams percent R on the daily chart has now broached the the 50% line. So that's encouraging. Now, the sum of the rate of change indicator is still below 4%. So again, you see, we still have these mixed signals. But I particularly like this morning star formation and the fact that the 4%, the 4 exponential moving average is trending up here. We'll see what happens. Another thing is that I've seen some research some short time ago that indicates that when the market closes higher than it opens on a Friday, which it did here, we can anticipate that on Monday we'll get a rally. So we'll see if that holds true in this instance. In summary then, the weekly chart still looks pretty bearish, with some indications that we might be getting some upside movement. But the daily chart is showing us more encouragement here. And of course, this is shorter time frame, with this bullish morning star formation. Let's move to some individual stocks. Well, before we look at individual stocks, I thought we might visit the impulse indicator for the S&P. And right now on this weekly chart, we're having, for the last 4 weeks, we've had blue impulse bars, which means we can go long or short. And of course, that was reflected, as you saw, in the movements up and down of the market. You can see it right here. Now, right now, we're sitting just above the 50-week moving average, and between the 30 and the 50, right in this congestion area here, apparently getting set up for move either up or down. I'm betting on the up move, of course, because we could see this triangle here, and triangle might very well turn out to be a continuation pattern, which means a continuation of an uptrend that got parabolic here. So, and if you look at the bottom of the chart here, MACD is trending up from below the zero line. So these are some indications that the market might be setting up for an up move. We'll see. And let's start as we usually do with Apple. Apple, I mentioned last weekend, we were here, and I said, I don't own Apple at that time. But on Monday, we were having a down day in the market, and Apple was going contrary to that trend. Apple was trending up. So I looked at a number of other indicators and so on, and I decided to buy 20 contracts of the 170 calls expiring in June 15. That's turned out to be a good trade so far. So Apple is looking good, and let's take a look at something else. We're looking at some daily charts now. So on Facebook, you can see that even though it's had its problems, Facebook still continues to look to be trending up, and it was up what, $2.59 here. So Facebook seems to be doing quite well. Look at the other indications. The other indicators are MACD is in bullish territory, etc. All three of these indicators here are looking bullish. I'll abbreviate some of my thoughts here so we can get a few more stocks in. Now I'm working off the shopping list that I sent you on April 13. And so we can see that a line, even though it dropped here, and it had some trouble getting out of its way here, seems to be trending up again. And some of these indicators are looking pretty good again. MACD is in bullish territory. I don't own it at this time, but it looks pretty good. Here's Microsoft, and I own this one. I held it through this move here, and it seemed to be trending up again, at least on Thursday and Friday. It started trending up again. Parabolic is below the most recent bar. That's an indication that it's an uptrend. And RSI 12 is above the 40% line, and these two other indicators are looking bullish. Here's another stock we have on the shopping list, and of course we can see that it really had a nice gap up here. I believe after declaring earnings, that would account for this. And so that's another one that seems to be doing well from the shopping list. Going down the shopping list, we come to MasterCard. We can see a similar thing here. Earnings gapped up and continue to move up still. So all these indicators are looking very bullish as of now anyway. Well, one caution here is that it's hitting the upper Bollinger Band. So don't be surprised to see MasterCard consolidate this gain here, pulling back a little. And that can be said for all of these stocks that are now in at 2 standard deviations above the mean. So be careful about that. May not be a good time to buy it right now. Might want to wait for pullback. Here's a medical stock that is on the shopping list. And look at what it did after declaring earnings. It gapped up, parabolic move below the bar, but it's breaking that 2 standard deviation line here. That's upper Bollinger Band. So to buy it here would be a little more risky. We want to wait till it consolidates a bit, and then maybe a good buy. Here we have MACD above the zero line, and these other indications trending up. So looking good. NVIDIA was another one on the shopping list, semiconductor, and it's trended up nicely last week. So making some walking around money. Here's a daily chart of XLK, which is the ETF of the spiders, you know. And it's really technology sector. It's we used to own this. I used to own this a while ago, but I don't own it right now. Looks like it's time to start looking at it seriously again. Parabolic below the most recent bar, big bullish bar here last week, and of course these indicators are looking up. So XLK is another one on the shopping list. Here is Netflix. I used to own it. I don't own it right now, but looking good again. Consolidate, came down here after it hit the upper Bollinger Band, and now consolidated and seem to be making a move again on Friday anyway. And these indicators are looking pretty good, except for the RSI 12. But RSI 12 is best when it's used on the weekly chart, and this is a daily chart. Here's a daily chart of Visa. As you know, I own this one. I've had it for a while, and then it's trending up again. So I continue to hold it. Another one I own is CRISPR. I believe I bought it when it was making this high here, either here or in this bar here. And you can see it touched the upper Bollinger Band and pulled back. Found some support here at this ABCD triangle. And now it seems to be trending up a little. I'm still holding it. I believe it's a great technology and it should do well. Here's a daily chart of Costco. Costco, you know, it consolidated for a long period here, and then it seems to be, on Friday at least, it made a nice move with the rest of the market. So Costco might be one to consider here. Another one on the shopping list is Adobe, which I own. And although it pulled back a bit here, now it seems to be trending up again. And I like how these indicators look. So I'm still holding it. Here's FFTY. Now, FFTY, of course, is an ETF of the 50 growth stocks at IBD Research. And so it pulled back all the way here to the 50-day, I think this is a 200-day moving average, and this blue line, and it tested it here, and then on Friday it had a nice move because many of these growth stocks moved up on Friday, of course. And the last one we look at is Cake, Cheesecake Factory. I own it. I have a few shares. I have some shares. But right now it seems to be in a squeeze, and hopefully it will move from here. It was brought to my attention when I looked at one of these don't ignore this chart emails that you get from stockcharts.com, and it looked pretty nice, pretty good. And right now all these indicators are looking pretty good. So I think we'll say it's a day, it's a wrap. And if you bet on the horses, I can tell you that Justify has 114 speed racing for the Kentucky Derby. Have a good weekend.